Yo, good morning, traders. Welcome back to another episode of Market in the Morning. Are you guys excited to make some money today? It is August 3rd. I can't believe it. You guys can't believe it. We're 1 month away from the end of summer, but thank goodness for that because that means volume will start coming back. I'm sure you guys have heard about it before, about summer being lower on volume. We have to always think in the perspective of hedge funds and those big institutions. They are not day traders, so they have plenty of money to be able to say, we're taking time off. So that's where a lot of that summer volume comes from. We're getting a lot of other news and headlines about the whole Iran war situation, talks possibly resuming today, the Japanese yen really taking a big hit as well. We're going to use Ask Market to break down some of these things. Guys, if you're excited, ready to make some money today, smash that like button because Market in the Morning starts right now. Jack, what's going on, Jack? Good morning, Beth, Famous, Piyush. Good morning, guys. Guys, drop a good morning if you're excited. Today is going to be a great day. It's a great day to have a great day, and it's a great week to make some money. So we're going to be doing just that today here at Market in the Morning. Let's run that like button up. Let's get things started on the right path today. And let's go over some charts. We saw a lot of things starting to rotate. Now, you guys know me, and you guys should probably know my bias by now. I have been bearish on the market since the last quarterly earnings of big tech, where there was a lot of uncertainty on heavy capex, right? Uncertainty leads to investors taking their money out. Well, this most recent quarter of earnings with places like Microsoft and Amazon, they took that heavy capex that they had and they're shifting it directly into profit. Whereas Tesla took that heavy capex and their margins are getting crushed. But because the NASDAQ, the S&P, is weighed heavier on places like Microsoft, Amazon, this is the big money. That is where there's optimism re-entering the market. And we're seeing that with our bullish bias here on market. And we're also getting continuation on this bullish bias too. That is fantastic. Elsa, good morning. Minhal, good morning. Gemma, good morning. What is up, guys? Luke, Matt, what is up, guys? Hello, good morning. How are you? I hope you guys had a fantastic weekend. We've got a lot to cover today. There was a lot that happened over the weekend that we have to cover, so we're aware and we're prepared. The only way to find success and consistency in these markets is preparation. Coming into the market every day, having the same routine that you follow, same setups that you look for, and being prepared and having routine. What's up, Crypto Hustler? What's going on, brother, man? Good morning. Noku, what's going on, man? Good morning. Good morning. Hope you guys are doing well. Hope you guys had a phenomenal weekend. You're ready to learn and earn this week. Remember, guys, whether you've been trading for a week, you've been trading for 6 months, you've been trading for 6 years, every day is about getting 1% better. Every day is about learning something from these markets. So, guys, I hope you're ready to learn and earn today. We're going to cover it with Market AI right now. We're going to see S&P 500 futures stay firm as oil and yields drop on Iran talks. Now, guys, a lot of people have heard about the Iran situation, right? Okay, things are starting to de-escalate again, but a lot of people are sort of missing that underlining why things could be slowing down. Now, when the Iran war picks up and things get more expensive, yields were moving higher, right? Now, our yields moving higher is not good because now we're also dealing with the whole Japanese yen situation. So, because the Japanese yen and the Japan is one of the biggest buyers of American yields, they might be forced to sell those to buy back their yen. So that's why the U.S. is starting to intervene. Look at this, guys. We're talking right now about the U.S. and Iran. U.S.-Iran talks resumption date. Venue undetermined. Pakistan source site. Okay. Iran denied. Yeah, bro. Piyush, is that nothing new, man? Where we get a headline saying that, oh, Trump says the talks are resuming. Then Iran comes out and says, we never said that. So a whole lot of back and forth. It really is. It's a ping pong. You guys ever see ping pong? Go back and forth with that. So we take those headlines for what it is, but that's why I focus more on like that heavy investor side, capex situations like that. And now you have the Japanese yen and intervention. Let's check our economic calendar today, see if there is anything we should be aware of. And take a look at that, guys. Monday, August 3rd, 10 a.m., we have ISM manufacturing PMI. So we could take a look at this, and we see our minimum is 52.8. our max is 57, and our bank forecast is 54. So, guys, if you're new here, you're not too sure, what does this all mean to me? Well, so the long and short of it is, if we come on forecast, we're going to get range-bound price action. We're not going to get that surprise reaction, that volatility that a lot of people look for that economic news. Whereas if we're near the minimum or below the minimum, near the maximum or above the maximum, guess what? We're going to get volatility. We're going to get that extra big move right there. And if you want to break it down even more, you hit this little icon over here, and it will tell you it's a key input for central bank rate decisions, signals overall economic strength and trends. A high impact release often moves currencies on surprise. Very important, guys. If it is range bound or if it's right near expectations, even if it's at like 54 when the bank forecast is, 55 when bank forecast is 54, that is not that big of a surprise. So we should not expect that big of a reaction. Now, I have been on red this last 2 weeks on gold. The month, it turns out good. Okay, yeah, this month, you know what? We're turning it around. You had a few red weeks. You got to be able to say, okay, what was I doing? You got to be able to answer a few things. How was I trading? Was I trading the same strategy that I was trading before this losing streak? And was that strategy winning before and then it started losing? Well, why? It didn't start losing because you strategy hopped. It started losing because market conditions started to roll over. Conditions were much choppier than 3-4 weeks ago, the past 2 weeks on gold. When that happens, a lot of our strategies, especially if they're breakout or trend following strategies in range bound markets, tend to fail a lot more. So that's our job as traders, to be able to recognize that and be able to adjust our trading, not completely hop, ship, and strategy hop, but adjust our trading to those market conditions. And that's where, journaling, breaking things down, screenshotting your trades, your before and after, writing up a review, having that pre-market prep will get you on the right side. So ISM manufacturing, we see that. Look at this right here. ISM manufacturing July, our prediction market we have here on MRKT, has a 55% chance to fall between 54 and 54.9. So it's right near our forecast. Other than that, we have a 44% chance of, I'm not sure how that works. 40. Look, so we have 55, we have 44, and then we have 30. We're gonna have to figure that out because I don't think this math is mathing up right here. We'll take a look. We'll break that down. I'll send that over to the team and see what's going on there. But something we want to keep an eye on. ES, if we are above forecast, that would be bearish. If we're below forecast, that would be bullish. We can take a look at that, see how that wants to come out. Tomorrow we have international trade deficit and factory orders. Factory orders is not that big of an impact. Neither is the international trade deficit unless we have that big of an impact and move. So guys, that's a quick rundown on our economic calendar today. We didn't dive too into the headlines just yet because we are bringing on the one, the only, Lab. Yes, sir. What's going on,
Morning,
bro?
man. Good Monday. Good Monday.
Yes, sir. You already know, man. Good Monday indeed. How you doing, man?
All good, bro. Just ready to absolutely kill this week. We got big stuff. We have NFP this week, but even bigger than that, man, we have the Ask Market launch tomorrow. I know you've covered a bit of it, but I'm excited, bro. How are you feeling for it?
Bro, I'm super excited on it, man. For everybody to be using it and sharing it, it's gonna be sick.
Yeah, it's like, dude, you know what? I have this feeling inside my gut that this is going to be an amazing launch. It's going to be amazing. Of course, things are going to come up, but the point is that this is, in my eyes, one of the most revolutionary things that has come out in the trading industry in a long time, and I'm excited to put it out and iterate on it. This isn't the end of it. This is just the start of it. This launches tomorrow. Ask Market launches tomorrow, and instantly we start iterating on the feedback on this. So you guys will see that iteration loop happen so fast. So again, thanks for joining us. It's Monday, August 3rd. We have 5 days of live streams ready for you. And the second one's going to be so impactful. There's a big red folder event tomorrow called Ask Market Launch. It's actually a global affecting launch. So Yeah, I
should
need
get
to
it
put it
in
on the
the
calendar. Good
calendar.
idea. Good idea, Kevin. We were thinking the same thing. We gotta put it on the calendar. Oh shit. And you know what? It should link to this stream, right? It should
Yo,
link to
there we
the
go.
stream. Oh, I gotta tell the team that. All right, guys, you might see that later on here today, but we'll jump into it, Kevin. So
Yes,
guys,
sir.
thanks for joining us. NFP stream end of this week. So make sure you tune in for that too, because we call it just how it is. We watch the data, we look at what's happening, we understand the data, watch what the market's digesting it as, and then we act on it. That's how trading fundamentals is supposed to be. You're supposed to understand the underlying story about what's being told, what's being said, and then how that's impacting markets right now. And a fantastic example of that is our friend gold. Gold here has been stuck in this range for weeks now. And this is something that Kevin and I made blatantly clear to you guys, was that as we get into this price point to the left over here, is that gold may start ranging, because this is now a very attractive buy price for gold, especially with the war coming to an end. And we've always mentioned that the biggest telltale sign of how the war is progressing is the price of crude oil. So all my tickers got mixed up, man. I had these in such a nice order, and then yeah, they all got mixed up. So remember this that we drew while oil was up here? Do you remember these arrows that we drew? And now look at this. Look how it's playing out. It's because Trump isn't going to have oil sitting at $100 a barrel. Midterms coming up. He's going to sideline the war. War is going to get sidelined. Oil, the price of oil is going to make it trickle its way down to low 60s, high 50s, and become it back down to the pre-war price point, which is around 45s, 50s, right? That median price coming down to there. And guess what's going to happen to gold? Is that gold is going to start then rallying once markets completely price out rate cuts, and then price out rate hikes, and then price in those rate cut bets. And then you're going to see gold start front running that move. And where's gold going to go? Gold's going to go right back to where it came from. It's going to go to 4,500. Gold's going to go to 4,700, 4,800. Heck, gold could even go back to 5K by end of year if that's what the market prices in. Excuse me, there's a loud sneeze. I muted right on time. Excuse me.
God bless, brother.
Thank you, man. Thank you so much. It's another day in paradise, another day.
Yes, sir.
So
that's funny, bro. I used that yesterday.
Yeah.
Yeah.
So with gold, that's where we currently are, is that gold has been stuck in a range, and you can see that both technically and fundamentally. More recently, what we added to market was a new state to our bias. And you'll see, like, as in case of like ES, we have a continuation state, which is the trend is healthy and still moving in the bias direction. But so you could even pull back to this support or this support and still be bullish, right? And with gold right now, the point being is that we're neutral ranging, because yes, Trump cancels. Remember, there was escalations that happened last week, right, which added pressure. And then Trump cancels Iran strikes, easing war tensions and oil spike fears. Wow. And now look at this. We just got a headline, which is an update headline, right? This is, by the way, an update of what's going on for all the lousy traders who don't want to keep up, is that oil prices dropped right after Trump canceled that happened. And then this just shows you that Trump is playing, it's a theatrics game, is that these escalations happen. And then as soon as markets are, as soon as oil comes to a higher price, Trump comes out, tackles the trade, and then oil starts making its way down. So I'm going to leave these magic arrows here, because when it plays out and oil sitting back down here, we won't even have to go to market in the morning. We can just go back to July 23rd's prediction that we had when oil was sitting at 91, dude. We were on market in the morning talking about this, that oil's eventually going to make its way down like this. And with that being said, then gold is going to price in those rate cut bets. Now this is the point being where the deeper gold digs into this, the more attractive it becomes a buy for me. And technically speaking, people might say, Nalab, gold is making lower highs here, lower highs here, lower highs here, lower highs here. But I'm playing a game of fundamental analysis. And yes, we are both right, is that gold is in a range, is that from the top of this range, you can expect sellers to jump in and defend that price level, right? From the bottom of this range, you can expect buyers to jump in and defend this support, this higher time frame support. Now, what this doesn't mean is that one side is stronger than the other currently, because we are in such a neutral environment for gold due to fears of the war continuing, right? But Trump also canceling the war, and markets continuing to price in a more dovish Fed for 2027. Now, why are they pricing in a more dovish Fed? Because Kevin Warsh left. First of all, the Fed held. There was 3 dissenters, which were the hawks. The other ones just wanted to hold. That's why the markets took it as more of a dovish hold. That they're like, okay, they held right now. Yes, there's 3 dissenters, but they didn't hike. No. So they're probably not going to hike next month in September, right? That's what the markets are always looking for, the most optimistic route. And I want you guys to keep this in mind, is this exact word. The markets are always looking for the most optimistic route. And this is where they get delusional. Even though it's not there, they'll still look for it. That's why I mentioned during FOMC that Kevin Warsh could say whatever he wants. The markets will take that meeting as a dove. And then exactly what we mentioned during that meeting for ES and NQ played out, right? We said that ES would, dude, I hate how my tickers got messed up. It's so annoying.
Did you hit one of the buttons up top?
Yeah, I did. I hit the one of these buttons, man. I hit one of these buttons.
Click it again.
But listen to this.
Put it back.
Yeah. So over here, we mentioned, watch this counter trend line over here, because we need to break this before pushing down. And I even said the deeper we push into here, the more of a buy this is for me, regardless if we completely correct the FOMC move. Now, I'm not an idiot when I speak things like this. When I'm talking about ES being here and I say, guys, be careful. If we push down here, we can possibly bounce, or we push deeper into this zone and we bounce. Okay. Why? Most technical traders take that as, oh, that's a FOMC whipsaw. FOMC didn't make a difference, but that is just price. This is just a price grab, right? This is markets doing its thing. This is market mechanics, and you can't do anything about that. The markets are going to do what the markets are going to do. But if you know that this was more of a dovish hold, that a bunch of things happened. Fed held rates, right? Fed held rate. 3 dissenters, meaning 3 wanted to hike. And Kashkari was one of them, Neil Kashkari. And then what happened was we had Warsh be more of a neutral approach. Okay. So one thing, Fed didn't hike. Markets were pricing in at 36% at the max of a hike. Did not hike. Already, that's more of a dovish thing. 3 dissenters who wanted to hike but didn't hike. Markets took it as a dove. Warsh taking a more neutral approach, saying he's not going to give forward guidance. Market took that as a dove. And guess what happened to U.S. equities? U.S. equities did a complete price grab from the exact level we were talking about in the FOMC stream. And look where U.S. equities are at now. This is all mechanics. Look, you came down right to this support. Buyers jumped in, and then Trump came out and said, hey, I'm gonna cancel those strikes. Markets took that optimism, gapped up, and we're continuing since. Now, what's going to happen this session? Now, let's go over that real quick. Hope this is making sense for everybody on what just occurred last week and what we can do now to prepare for it. Now, I'm not someone who likes to buy here, because the best buying opportunities are this, here, right here. What I would look for and I would like to see is either we pull back to 7,500 before we see buyers jump in. We pull back to 74.30 area, 30s area for buyers jump in. And I would like to see these levels defended. Okay. If we can see price come into this play, that's when I would look for SPX buys going off into the week. And these would be my more higher probability intraday setups for the coming day and the sessions to come. Now, if market just continues up here, that's cool. If you're a scalper, feel free to take that. I'm not looking to take that, because this is what sometimes happens, is that when we're heading up into this price point, look, markets corrected fully down to this price point before continuing higher. Now, I don't want to be a part of that. I'd rather wait for the pullback to come to me. Just like how I mentioned, if you're not in these buys in S&P 500 during FOMC from before, don't buy, because we have this corrective structure that if buyers can't take out and sellers defend this, we're heading straight down, man. And look where we went down. We went down here, we went down here, and we completely got the buyers in from here. We got buyers in on Friday right here, and then Trump came out more optimistic, pushed up here. Now, just because we get these intraday pullbacks doesn't mean that sentiment has now shifted. Sentiment is still bullish. Sentiment is bullish because markets are pricing out those hikes, as well as Trump coming out with more, saying that he's not going to bomb Iran. Now, I saw a comment come up: if the war ends, would it be a bit slower on the buys? So exactly. And one thing to mention is that markets are always forward looking. They're always pricing things to come. So Trump canceling this already sets that in stone, where it's like, okay, that optimism, it's still running fresh, right? You're going to see it die out over the course. Like, it's not going to die out. Like, there's not like one statement that ends it completely, right? Like, look at and one of the best examples of that is Biden in Afghanistan in 2020, or what was it, like 2022, 2021, where they left Afghanistan after 20 years. So it wasn't a single statement that ever ended it. It was 20 years later that ended. So what I'm expecting and what I'm anticipating, keep in mind, these are all my personal theories that I bring to the table, right? And just what like me and the team discuss on a day-to-day basis. Like, oil, the price of oil is going to be the biggest tell of how other markets perform right now. And it's been the biggest tell. Is we're in a regime right now that's guided by oil, because that is the main focus in this entire geopolitical war and tensions that are ongoing, right? At first, it was tariffs last year, right? And rate cuts, being tariffs over here, rate cuts priced in here, more rate cuts and tariffs. And then Kevin and I mentioned that, we're approaching a point where the markets don't care about rates and rate cuts anymore. Remember that, Kevin? In like February time, we were talking about this. And we also mentioned that there is always something that the market focuses on. If it's not the rate cuts that the market was pricing in, then what is it going to be? It just ended up being the war. And the market took that as the main focus, right? And now here's also an example on ES. Here, let me just pull up ES. Man, I'm going to fix this before next year. So an example on ES is, so over here, you can see that this is where Trump came out and said there's a 2-week ceasefire. And look at the amount of times there's been escalation since then. So many times. This entire bull run over here had escalations, but the markets ate it up because they were so delusionally optimistic. And this is where I'm talking about the markets will always take the more optimistic route. Now, look, this is where that SPX bottom is in, man. This is that XPX bottom that we were talking about from last. These are the FOMC arrows I was talking about, right? And look how beautifully all of this is playing out. Now, we aren't people who are going to get caught up in this and be like, oh shit, man, I'm not in this trade, and get FOMO. This, trust me, moves like this happen every single day where a pullback happens. So going into this week, if we know we're in a more optimistic environment because fundamentals are pointing towards there, because we had Trump come out and cancel the Iran strikes, because we have markets being more optimistic due to no rate hikes and inflation dropping, because price of oil is coming down. And again, it all comes back to the price of oil. Inflation is only dropping because markets were priced. CPI was counting this part in, right? CPI didn't count. This hasn't come in yet. But if this gets canceled out, if this move gets canceled out, inflation continues to come down. And then exactly as we have been talking about, gold will eventually head back towards 5K. S&P, NASDAQ will be at all-time highs, pushing into midterms, and Trump will be coming out on Trump Social, charging us $100,000 a month for for a tweet that comes out 10 seconds before. Being like, told you guys to remember that inflation report. And we talked about this, guys. Like, look, if I type here Trump inflation, look what he said about the last report. Trump says he reviewed inflation, robust inflation data. Okay, not even that. Look at this. Remember that for midterms. Trump literally said this after the report came out. Trump on inflation report. Remember that for midterms. This guy's coming to us telling us, hey, he even said inflation report was incredible. Thank you for bringing that up. So things of this nature, he's telling us what's happening. And even here, look, there's a few more headlines I want to go through. Down here, cites inflation reports. Yep, describes inflation were amazing. Okay, this is important, guys. Trump sees low inflation trends persisting amid rate decline. Now, every time Trump has told us something, it's happened. Like, I want you to keep that in mind. Every single time. Find me a time Donald Trump hasn't said something about the markets and it hasn't happened. Find me a time. Find me a time he hasn't done something with an intent behind it. And I'll show you 10 examples of every time where Donald Trump said now is the time to buy, and he comes out, he says it, and then the stock market rallies, and that's the bottom. That's the absolute bottom. Trump came out April, what was it? April 7th? April 8th or April 7th. I got the April 7th lows on S&P and across all stocks. Trump came out April 8th, said now's a good time to buy, or he said it on Monday, Tuesday, I forgot, and then that was a low. Now, when Trump tells you inflation is going to come down, and he's single-handedly the man who's powerful enough to bring down the price of oil, which immediately the markets start pricing in lower inflation, rate cuts to come. Don't you think Trump's going to also take that optimistic route heading into midterms? Absolutely, he will. And this is why you take global macroeconomics, geopolitics, and translate it into markets. Markets are a whole story that's being told. If I zoom out here, I want you guys eventually to be able to tell me every single big downturn that we saw here and what it meant and what actually caused it and what led to the rally. And if you know this, then you're operating with the right mindset for longevity in the markets. Because when these ranging conditions occur, just like they are on gold right now, either you can absolutely blow every single dollar that you made on this rundown because you couldn't handle 7-8 weeks of uncertainty because of everything that's going on, and you didn't understand that shift that needed to occur in your psychology, because we all need to adjust to it, right? Everybody gets comfortable. I got comfortable going into this, coming off of this trend, right? And then I was shorting this over here, expecting much more than I should have been expecting from the market, and then taking a break even or a loss, right? So things of that nature we need to keep in mind. And then on the opposite end, when you're buying right now from these lows, you also can't be expecting too much because we haven't had a catalyst that truly drives gold outside of this range. Until then, we aren't completely bullish, but we're building that narrative behind the scene, and we're building that thesis behind the scene. Because remember, it's not just one thing that pushes gold bullish. It's a series of events that take place, series of data releases that point towards rate cuts that will get priced in, and everything comes right back to monetary policy expectations and what the markets are pricing in for the upcoming and near-term rates. So now, big lesson right there. We went through some trade ideas as well. Hope everybody's feeling a bit more prepped for the week. We have NFP. Do you think gold will pull back to 39.30s before I push towards the upside? I don't know, man. Could depend. Could happen, couldn't happen. All I know is I'm going to be alert of what happens. That's for something like that to happen, you would need a catalyst. Is what's going to take gold down 1,000 pips right now? What's going to take it down? Is it going to take that? Is it going to be new escalations, or is it going to be a hot NFP report? NFP absolutely breaking past its maximum expectation of 140,000 jobs, right? If it came out above that, right, then you would get such a hot NFP, then gold would continue to push down lower into 4,000s and 3,900, higher 3,900s, right? Now, for gold to push up, you would need to get the opposite. You would need NFP to either come out lower than prior and lower, if it came out lower than minimum expectation, 50,000, that's bad. Markets are going to price in rate cuts, right? Then gold's going to push up. And if unemployment rate drops as well, if it drops below minimum expectation of 4.1, then it's going to push. But unemployment rate right now, it's forecasted to go up. So what we need to keep in mind is how this data comes out and what the markets focus on. The one that's a surprise is the one that the market will focus on. And how do you figure out the one that's a surprise? So if we go to last week's data, you'll see a fire icon that comes up next to these reports that are a surprise. So in this case, initial jobless claims on 2 Thursdays ago came out at 187,000 jobs, initial jobless claims, right? Forecast was 212, bank forecast was 201, and then prior was 208, minimum was 195K. So you can see how it broke the minimum expectation and it came out outside that range. So we had higher volatility during that time. So that's what you have to keep in mind is how this report comes out relative and which one's more of a surprise. So you can click the brain icon here. You can check the playbooks that we have for NFP. Now, just going back here and what gold's doing for the session, I'm not really looking for anything on gold at the moment. When I go to my levels over here, the reason I'm not looking for anything is because gold's kind of in the middle of this range. We had buying take place over here. If you weren't in buys here, man, there's no point in chasing it. Like this is just such a dirty range. And when gold's in this, I just don't like to even watch it, man. It's just so like, look what happens. Like you were getting attempts. This was CPI over here, okay? Markets tried pushing up. Even though CPI came out lower than expected, markets pushed up. Like even here, we can go on market, back to dashboard. Now let's just go to CPI right here. Like this was the CPI move, right? Soft US CPI sharply lowers Fed hike expectations. Now, this came out lower than the forecast of 3.8, and the minimum expectation was 3.6. So if this came out 3.5, it was a surprise. Surprise, surprise. So that's why the markets pushed from 4,020 to 4,100. Now, this is how you have to observe and keep in mind we're in a ranging market. Market didn't even completely push up to that price, and we corrected that move, push down, grab better price. So since we're in a ranging environment, you have to take what you can get on gold and not get greedy. So yeah, basically that's what I'm looking for gold is if we push deeper into these areas, like over here, down here, or even into here, going into NFP, that's where I would like to position myself into those buys for potentially higher unemployment rate plus lower jobs report, which would then price in those rate cut bets, and we would get markets pushing up. And maybe if this setup happens before NFP over here, that maybe I'm risk-free by the time NFP is, and let's say prices here and we push up. Just like how we did that for FOMC last week, just like how we did that for NFP over here, where we were in those sells on gold for the June NFP from 4,530 and 4,510. And then NFP was 2 days after. And by that time, we were already hundreds of pips in profits. So that's exactly how we need to think about the markets. And you need to think about what the Fed cares about. And the Fed only cares about a few things. It's inflation data and the labor market. So based on that, all this data just points towards, like with oil coming down, inflation eventually coming down, markets pricing in those rate cut expectations and pricing once those rate hikes are eventually priced out. And then you get that narrative building. And just like 2022, which majority of the traders and mentors weren't even trading then, right? They have no idea about what happened to gold here and why gold went here. So anytime some new guy tries to tell me, oh yeah, gold was started to shifting bullish because of triple bottom. No, man, the markets priced out rate hikes here because this was Fed's most aggressive rate hike cycle in history, in modern history, since Paul Volcker times. The majority of the people don't even know who Paul Volcker was. So when we come here, we have to think about markets and give it the respect that it deserves. The markets are not a one-dimensional environment. This is an environment that the price of it is decided based on every single thing that is going on globally, and we all come together and actively decide the price of this. So, Kevin, you have anything to add? Because I got to hop off. I have a meeting in a few minutes, so this is a quick session for me.
Oh, bro,
Guys,
that was
yeah, join us tomorrow for the Ask Market launch. So much to go over. Yeah, man, I've just been having such a good time playing around with it, asking it to prepare me for upcoming releases, and just having a time of my life with it. Honestly, like look at this awesome. NFP preparation, exciting stuff, exciting. So join us tomorrow, guys, when we launch Ask Market, and it's going to be a big event.
That's great. Nil, thank you for being here. Thank you for running that through with us. If you do have time for one more question, just a brief overview. What are your thoughts on the whole Japanese yen situation right now?
Yeah, we saw Bank of Japan intervene, right? And let me pull up USD JPY. Yeah. So even this is just like it was in 2024. It's people don't realize this isn't the first time Bank of Japan or the Ministry of Finance has intervened on behalf of Bank of Japan, right? Like, what do you think these moves were? These were the exact same plays. Was a Ministry of Finance stepping in to prop up the yen when dollar also surges and dollar yen is sitting at the highs. It's those chances of Bank of Japan and Ministry of Finance intervening on behalf of Bank of Japan increases. So that's what you have to keep in mind. But overarching, that trend like continues, right? Is you have to be careful trading yen pairs when they're sitting at these highs, especially combined with when you get more hot dollar data. Is if the dollar is also surging, that's when the chances of it increases as well. So yeah, you have to keep in mind with Bank of Japan and how their policy differs, and that's a whole other lesson that I suggest you watch and look into, because they have had a much different problem than the rest of the world since the 80s. The Japanese economy has had a deflationary problem since the 80s. You could talk about it, and it got worse with their aging population, right? Like their birth rate is so low, is that they have a very high aging population. A lot of their citizens are like 80s, 90s. So they have a massive deflationary process. So for the past 40 years, 4 decades, you had Bank of Japan setting an ultra loose monetary policy to stimulate the Japanese economy, and to the point where they had negative rates for so long, right? Like think about that. They had negative interest rate policy for so long to prop up inflation because of their deflationary crisis. And it took them decades to get inflation back up. Decades of different chairman of the Bank of Japan. We had the most recent one, Ueda, right? Ueda before that. But think about this, completely different divergence from US. And all this time, all of that is noticeable. So when you look at USD yen and you see these massive, let me go to a better one actually, USD JPY.
Guys, smash that like button for Noab, man.
Oh shit, I have a minute left. So when you see this massive place towards the upside, it's because of rate differentials that exist, right? Because these two central bank monetary policies are different, and they're completely opposite of one another at times, right? So you have these massive rate differentials. But yeah, that's something to keep in mind, is that these higher yen prices, because Bank of Japan, sorry, where's JPY futures? Like, look at this on a month. Like, for this is a bad example. Where is the JPY futures on here? Here we go, 6J. There we go. Look at this, and this is going back to 2011. Yen is at all-time lows. This is not new. This is not new for yen to be at all-time lows. Yen was at lows 2 years ago. Yen was at lows 4 years ago. Yen has continuously gone down because that's what the markets are pricing in, is that even with the hawkish policy, the yen completely gets devalued. And that's what this yen carry trade was, right? For years, was people borrowing, banks and institutions borrowing money in yen and investing that in foreign markets because they were able to get it at such cheap rates. Guys, I gotta hop off. But thanks for jumping. Thanks for this hosting this, Kevin. I have
Of course, bro.
like 3 back-to-back meetings. And
oh, bro, listen, man. I'll see you in a little bit. We got our own meeting ourselves in a few hours.
Meeting in a few hours. All right, take care, man.
Go do your thing, homie. Thank you for being here. Awesome, guys. Great stuff. Great breakdown by Nalab. We're going to keep the stream going for another hour and a half to give you guys the New York session open. I'm going to set you guys up with some price levels to watch on the S&P 500, the NASDAQ, gold. We're going to look to take some trades if something presents itself. Now, I did see another question I wanted to cover, and this is a phenomenal question by the battle over here, the Potosi, or XAU, whatever you want me to call you, brother. Introduce yourself. What's your name? But he asks, what holds more weight, inflation/price and the labor market, or what someone like Trump says? Now, this is a great question because there is no, oh, Trump's more important than the economic data. It's what it is. It's a domino effect, and it's the idea of markets are always forward looking. So if Trump announces something that has a bearish impact on oil, and we know that weaker oil, so cheaper oil prices, means lower inflation because it's lower gas costs, then we know that what Trump said domino affected into the economic data, which again domino affects into forward looking, into those rate cuts, into positivity for the market, for the economy. So it's not so much which one's more important, but it's more so which one does the market rely on and how is it impacting the economy. Trump could say anything he wants. We've seen, good to meet you, Cass. We've seen markets have no care in the world about what Trump has to say, right? He could say, we're going to bomb them harder than before, right? And a month ago, that would have made markets react bearish and been like, oh my goodness, that's crazy. 600-point move on NASDAQ to the downside. Gold crashed 400 pips. Now he could say, we're going to attack them this weekend, and markets are going to sort of shrug it off. It's not going to give us that big of an impact. So we have to really be keeping an eye on, like Nalab mentioned before, and like I've been telling you guys too, where is oil trading right now? This is something I've been mentioning to you guys for months, since the whole Iran war began, that when you're trading things like the S&P 500 and NASDAQ, we want to trade with something called the VIX, the volatility index, right? So the volatility index is down here, and this measures SPX options that are expiring within that next month. But at this point, and during this Iran war, during escalations, geopolitical, global escalations, not just US escalations, global geopolitical escalations, we want to actually look at something like oil to be sort of like that, that VIX for us, for the economy, for the global, for everything. So when we take a look at oil right over here, and we see oil is pushing lower, then we know that this is a good sign for inflation. That's going to help inflation cool off. Now, unfortunately, this past month, we did have that 40% rally on oil. We pulled back, but that's most likely not going to have the biggest of impacts on that CPI inflation until we see weaker oil for longer, where it holds lower for longer. Right now, our core inflation was at 3.5%. That was last month's inflation report. Now we want to see, well, technically it was June's inflation report because we report last month's in this month. So when we get our CPI report in August, we're going to be getting July's CPI report. So because we did have that move up, it might not move that much lower. So we are going to keep an eye on that. But great question on, what holds more weight. It's more so what's impacting the actual economy. Trump could say anything he wants. He could say, Putin's my best friend, keep going with the war in Ukraine, and that's going to have zero impact on our economy because it has no impact on our economy. It has no relation, right? No correlation. So it's all about the bigger picture. We always have to tie things together. Just like trading. Trading isn't just, I trade an opening range breakout, that's my strategy. I trade moving averages, that's my strategy. You have to have your strategy. You have to have your risk management. You have to have a higher time frame analysis where you're finding those key levels of interest and you put everything together. That's how the economy is. Trump says A, B, and C. Does oil react? How does that have an impact on our data? Boom, everything comes together. What's your take on DJ? Let's see. And why is it different from NQ? So DJ, you're talking about Dow Jones is more of an industrial sector, so more of a growth, whereas NQ is more of, obviously, the NASDAQ is tech. So tech is very strong lately off of the optimism from those big earnings. So we could take a look. Let's take a look at our ask market. And let's ask market, why is NASDAQ so bullish lately? And it should give us a breakdown of those, what's it called? Absolutely, I got you. Should give us a breakdown of the earnings that came out. Microsoft, Amazon. Now, Apple did have a bearish reaction to the earnings. Obviously, so did Tesla. But let's ask market and see what's going on. There it is. AI earnings resilience right there. And data center capex are powering the rally, even as high long end yields try to cap valuations. Trump-Iran strike cancellation crushed oil and inflation fears this morning. So there's that hand in hand. Trump's Iran strike cancellation. So there's Trump saying something. Crushed oil. There goes oil reacting. And inflation fears. So it's crushing the inflation fears. This is the domino effect that we're seeing from a headline. While the Fed Williams signaled gradual disinflation, both tailwinds for a long duration tech. So tech is responsive to that, right? Lower oil prices are great for these big companies because it means less spending for imports, exports, less spending on everything else. They could then use that money that they were using to spend on imports, exports to then go into that capex, right? Less spending is great for those companies because investors see that as higher ROI, right? Higher return on investment for those assets, higher margins. So that's really good. So powering the rally, AI capex strength, Microsoft and mega cap AI data center plans are keeping tech leadership momentum locked in. Oil collapse, Trump's pivot to diplomacy with Iran sent crude tumbling, easing input costs and inflation expectations. US-Japan FX intervention, coordinated yen-supported stabilized carry trades, and boosted risk appetite. Whenever you guys see a term like this where it says boosted risk appetite, risk means they're putting money into the market. If they're risk off, that means they're taking money out of the market and we're more bearish. If they're risk on, they're putting money into the market because they have optimism, they have hope, but they have confidence in the market because of whatever the data releases are. Is that why the Trump tracker? No, I don't think the Trump tracker was taken down. Let's take a look. Go to our dashboard. I thought it was in general markets. Yeah, right over here, Trump tracker, right in general markets now on our homepage. Got you, Ryder, for sure. So yeah, guys, quick little run through our homepage here on Market AI. And if you don't have marketedge.ai yet, I'm going to throw a little QR code in the top corner over there. You guys scan that. If not, you just type in marketedge.ai, sign up, use discount code KEV for 10% off. But you need a terminal like this, especially in these types of market conditions where one headline can have that big of an impact on oil, which has that big of an impact on inflation, which has that big of an impact on the equities and indices that we trade. So extremely important that we stay aware. We don't force trades and we follow what the markets tell us. Absolutely. You got it, guys. Guys, smash that like button. Let's run that up. Let's hit 50. Let's hit 75 today. Really keep it high. Love seeing you guys in here. It is Monday. This is going to be a killer week. Invite your friends. Let's get more and more people in these streams. These are free streams for you guys, so definitely take advantage of it. It seems like we had a headline right here. Here we go. Let's see if things start picking up before New York session opens. Iranian source. Tehran rejects U.S. proposal to open Strait of Hormuz until the war ends. Guys, this is wild. Is there a video to run down and efficiently and effectively use market? We could check the Market TV tab. So the Market TV tab gives us our live stream today, but it also gives us other videos that we have put out before. You can hit view all on YouTube and that'll bring up our YouTube page. There should be a video on here that gives you the rundown, but I will give you a rundown on market myself right now. We want NQ to sell. Yeah, can you sort that out for me? Elsa, good morning. Absolutely. Yeah, I can sort that out. Let me call my guy. Oh, my Market TV is all messed up over here. See if I can get rid of that. Oh, you know why? Because I'm zoomed in. There we go. Oh, no. What's going on? Refresh, Please fix it. There you go. Perfect. Perfect. And yo, you know what? You guys know what I do? I take out the flip phone. I make a quick call. So sell the NASDAQ off the open. Retail's going to think we're pumping. Now it's going to be secure. We're going to clip that. We're going to run that back when it happens. But real quick, I do want to give you some levels on ES and NQ, and then we're going to dive into how to actually use MRKT. So S&P 500 we're looking at over here. Here's a 15-minute time frame. Something I want to point out right off the bat. 2 hour, right? We had this great zone where price reacted to. It gave us a sell position here for 90 points, here for 80 points, another one here for another. Take our measurement tool, 60 points. So this area, this zone on the S&P 500, multiple occasions between 75.04 and 75.20 has been a great sell zone. But guess what? We had that optimism kick in over here from earnings. We had a lot starting to stack up for optimism for the market, for investors to say, I'm buying now. We flipped this zone. Now I'm looking for this very area, the same area, to hold as support. I want to see us come back towards 75.20, start to base out, which means consolidate on like a 5-minute chart, and start to hold. Once we start to hold with strength, we could take it long, stop near the low, target new high of day. That would be one of the main setups I'm looking for on ES today, which would call us, which would call for us to move lower towards that 75.20. It's about 40 points away from where the ES is right now. Take a look at the NASDAQ. Bit of a similar situation on NQ, where we had this 28,150 zone. And this was a great sell spot for the NASDAQ for multiple days. Sold off here for, let's see, our measurement tool, 300 points. Sold off again over here, 300 points. Sold off again over here, 500, 600 points on that NASDAQ sell-off. Then we had our then we had our FOMC meeting. We rallied into it. And what did we do? We sold off 800 points from that spot. Then we tried to break it. A new demand zone formed over here. Again, supply demand is my edge on top of the fundamentals. So we line things up in trading. It's all about stacking confluences. You want multiple reasons, multiple supporting factors to why you're entering the trade and why you have that specific bias. So for the NASDAQ, this 28,150 then acted as support. Then acted again as support on Friday, gave us beautiful longs on Friday. Now at this point, we're at 28,140. I want to see that 300-point pullback towards that zone, possibly look to hold previous day low, then trade our way back higher from there. We have a bullish bias with market. We could take a look at our MRKT. Let's see. NQ, bullish. It is showing a little overbought. Prices climbed hard and fast, so a pullback is likely. Don't chase longs at the highs. Bias. So what's supporting NQ bias? This is great. Let's see. It even has the thumbs up, thumbs down. So if you guys don't agree with it, you could throw it a thumbs down and tell it why. If you do agree with it, you throw it a thumbs up. So what supports the bias? Trump pushes for Iran nuclear talks, reduces extreme geopolitical tail scenarios. Fed rate hold keeps financial conditions relatively supportive for growth stocks, which falls in line with growth in tech. And AI earnings strength. And if you ever see a headline like this with this recent UI update that we've had on market, we can hit explain and it will explain it for you on why that's actually supporting markets. So risk on, we know risk on is bullish. The headline lowers the probability of a Strait of Hormuz shock and a direct U.S.-Iran military escalation. So it reduces that. That's good. That's positive. What could flip it? High long end U.S. yields pressure long duration tech valuations. Well, what's that mean? Okay, risk off for long duration growth in tech as higher long end U.S. yields push up discount rates and compress valuations. Elevated 10 and 30-year yields driven by sticky inflation, war-related oil risks, and doubts over Fed credibility. everything lining up, but this is what could flip it. This is not what's supporting it. What's supporting it is over here. That's keeping us bullish. If we do start flipping bearish or see headlines relating to what could flip it, that's when we want to be a little extra careful. Elsa asking what zone is that? So 2-hour time frame, I found the support area. And again, it held up very well on Friday. I want to see if price can hold that same zone today. Can you break down the Dow Jones? Of course I could break it down. I could go behind over here and I could boogie oogie break it down. Look at that strength in the Dow right here. That's fantastic. Let's go back to our market terminal and see what exactly is holding the Dow. So here comes our YM, Dow Jones, by oil slump, yen support ahead of US data. What supports the Dow? OPEC seeing raising oil output to counter war disruption. Gaza disarmament plan reduces war risk and supports equities. Big tech AI capex worries driven rotation into Dow components. So this is when it tells you about big tech AI capex worries, it's referring to those Tesla worries, right? Where it says we have all this big capex, we're spending so much money, but where's that actual profit coming in at that point? So Dow Jones still bullish. It is seeing a reversal risk. We could hit Y over here. Long dated US yields rising as investors brace for more volatility. You click that, it'll show you over here. Ask why, hit explain. So definitely some things to consider. I would be very careful when it comes to trading anything. The Dow, gold, NASDAQ. We want to be cautious with our entries where we're not just buying high because we're moving higher, where we give ourselves reasonable areas for price to pull back. Now look at the Dow. I'm glad you pointed out the Dow, kid, because Dow is very close to its all-time highs right now. This is going to help drive the S&P higher, drive the NASDAQ higher. We're going to see that correlation and continuation there. We're back above this recent pivot, which was our lower highs we were creating. So we're back to creating higher highs. This is supporting bullish bias with the fundamentals and now our technicals as well. Let's see, previous day low is way down here. Previous day high is way over here, 52,772. Previous day low, 52,124. 30-minute, just check to see if there's anything relevant. I really don't see much. I like this area near 53,000 for a possible pullback. Look at that, guys. I just showed you and found that 53,000 area. Then we came over to market. And what's that market level? 53,054. What's my level? 53,000. Look at that. 54 lines up right in that spot. So this is a good pullback zone, right? If we have that continuation, we continue with momentum on something like the Dow, I would like to see a pullback near 5,300. It's a market pullback. It's my own analysis pullback. Very nice right there. Throw our fib tool up here as well. And take a look at that. It lines up right with our 61% level. So there's a lot of supporting factors. Like we mentioned before, we look for supporting factors in our trading because that's going to give us that insight and follow through to say, boom, this and this and this. It's funny, it's something that I'm teaching in the masterclass that I'm coaching. You want to have an and factor to your trades. You want to be able to say, I'm taking this long position because we have VWAP. Look at this, VWAP lining up there. We have our optimal trade entry, the Fibonacci lining up there. We have a major support area that, look at this green zone. It was resistance multiple times. Now we're going to be seeing price use it as support. So we have a major level. We have our VWAP. We have our Fibonacci. We have our market fundamentals in our favor. This is a lot of bullish factors to support a pullback entry on these longs on the Dow. So I'd be careful, keep an eye on it. Now, does that mean you should throw a limit order over here and just hope for the best? Absolutely not. But what it does mean is you could add an alert over here. So let's say you're looking at another asset at that point, and then price pulls back to your level. You could then look to see the reaction to that zone, right? We want to wait for that reaction. We can predict if we're going into some type of economic data event, if we're using a tool like market. But for the most part, when we are day trading, we want to look for the reaction to our predetermined zones. That's where preparation comes in play. Yo, Tazzy, what's up, brother, man? Good morning, good morning. Jessica, good morning. Elsa, hello, hello. You guys got any questions? Please let me know So if we have this news that comes out, since EJ is an index of industrial averages, wouldn't that be a bearish catalyst from the highs it is trading at? Which news? Which news are you referring to? You're referring to the news about the ceasefire and stuff, or are you referring to the news of Iran saying that no? Now let's see. Iran sources says U.S. grants consensus on Strait of Hormuz southern route closure. So they're still saying, we'll see. We'll see. Risk on bias. Let's see. U.S. concession on southern Hormuz route signals reduced tail risk of full energy choke point, easing immediate systematic stress. The main channel is lower war premia in oil and shipping, plus improved visibility on energy flows that helps central banks and growth-sensitive assets. Growth-sensitive would be the Dow. The news about Iran closing. So the Strait, so at this point, right, we have to really look at those Strait of Hormuz updates as another whole Trump situation where it's like, okay, we have another headline about the Strait. They're opening it, they're closing it, they're opening it, they're closing it. They won't open it fully till the war ends. They will open it temporarily. Markets are not listening to these headlines and giving them a lot of weight. They're not saying, wow, we're closing them. Oh my God, oil's going to pump now, right? Let's take a look at oil. Did oil react? No. If oil's not reacting, we're not reacting. That's how markets are taking these things in. Let's see. So also had somebody asking, how about gold? Just joined. What's going on? Welcome to the stream. Make sure you like, subscribe. We do this Monday through Friday for you guys for absolutely free. I host these Monday through Friday. Nalab was with us for the first hour. Nil will be joining us. Tomorrow is going to be the launch of Ask Market. I believe we're going to be having Jeev and Nalab both on the live stream for you guys. They'll probably kick me to the curb and have me on the back end, but I'll still be here. ES and so guys, we'll cover ES and gold in just a moment. Iran is just waiting for war. That's the big, yep, exactly. Correlation that exists between. So there's not much correlation between the two. So because they're sort of two main sectors themselves, let's ask market, and we could ask market that exact question. Ready? What's the correlation that exists between the NASDAQ and the Dow? So the way I teach and the way I go about it is the Dow doesn't really have that correlation with the NASDAQ. What it is if the NASDAQ and the Dow are both moving bullish, that has a strong correlation and follow through on the S&P 500. So we have to look at the S&P, right? S&P is top 500 companies. The Dow, handpicked companies from the S&P. NASDAQ, handpicked companies from the S&P, and of course, it's its own exchange too. So when we see that, those are trading together, that's optimism in general broad markets, ES is going to be rallying. So let's break that down. Let's ask market and see how it breaks it down for us. Back and forth, the vague open end. Yeah, exactly. Just nothing new there, right, Tazzy? Back and forth, vague open-ended statements from Donald Trump. So the NASDAQ and Dow typically move in the same direction during broad market trends. Exactly what I just said, right? S&P 500, that broad market, if it's trending higher, we're going to see both of them trending together. There can be times where there are different sector rotations where one's outperforming the other. But with different magnitude and sector-driven divergences. Again, this is something that I know, but if you have that question about, Ask Market's going to be able to answer all of your questions. I am so excited for this to be out and launched for you guys. Key correlation dynamics, positive correlation in risk-on, risk-off regimes. Both indices rise when growth optimism dominates, but both fall during systematic deleveraging. Excuse me, I can't read today apparently. Or risk recession fears. Magnitude divergence. NASDAQ is tech heavy and growth oriented, showing higher beta. It amplifies moves in both directions. The Dow 30 industrial, and it's more of the value sector. So we had growth, now we have value, is comparatively dampened. Sector rotation breaks the link when investors rotate from growth to value, rising rates, inflation fears, late cycle rotations and positioning. The Dow can outperform or even rally while NASDAQ corrects. And of course, the other way around as well. Yeah, it's going to be sick. It's going to be very cool. Let's see what else we got. Mega cap overlap matters now. So Apple, Microsoft, and other tech giants sit in both indices, the Dow and the NASDAQ. So there's some correlation between some of the stocks and companies that they hold. An intraday correlation is high, 0.85 to 0.95 on most days, but monthly/quarterly correction drops as macro regime shifts plays out. Want the live sentiment and levels on NASDAQ or IM to see? This is so cool, man. Very excited, guys. Any questions, drop it in the chat. Let me know what you're trading. Let's cover gold real quick for all our gold homies. Now, me personally, because gold is still range bound, we could look at the daily time frame. If anybody looks at the daily and they tell you, what do you mean gold is bullish now? Or what do you mean gold is bearish right now? They're talking out their butt. You could argue bearish over bullish right now, seeing where we are relative to all-time highs. We're 28% off of those all-time highs. However, to say that we have a strong bear trend at this point, when gold has not made a new low since June 30th, and now it's August 3rd, that's all relative, right? We haven't made that new low because gold has been extremely range-bound for over 34 days. That is 24 trading days a pure range on gold, where we try to break high, we find a move back lower, we try to break low, we find a move back higher. This is a no trade zone. This is a trade the extremes, nowhere else. So something I want to keep an eye on with gold today, we're looking at XAU USD right here, is I would want to see gold try to break lower for this little intraday move like we're seeing right now. Try to move lower towards break previous day low, possibly reverse off previous day low. But ideally, what I would want to see is us break towards this 4,000, right? So 4,000 key psychological point that no matter what strategy you trade, no matter what time you're trading, it's going to be giving you that same psychological point. Where I trade opening range breakout, I want to target 4,000. I trade initial balance, I want to target 4,000. I trade moving averages, I want to target 4,000. That, and this was an area that price showed us support before, I want to see that support happen again. So right now, that doesn't mean I would go short on gold right here, and that doesn't mean that short from here aren't going to play out. This is just my analysis and my read on it. And you guys could have a completely different read. You could see this and be like, what do you mean this is my perfect setup right here? Let's say you use a moving average. Let's say you use like a 50. Let's change this to 50. Style, we're going to make the color orange. Everybody loves a nice gross orange. Beautiful, great. Orange and blue, there we go. Let's go Nixon 6, Nixon 5. But look at that, rejection off our 50, right? If you have a setup, go for it. Me personally, because of how range bound we've been, I'd want to be a little extra careful. I do want to see us head to these extremes and then find a pullback from that area. Yeah, staying out of gold as it is also the first day of the month for traders. Absolutely. Another reason to sort of let the dust settle. And I'm glad you mentioned that because now we can also check, right? We don't check the monthly chart often, but when it's a new month, it's important that we keep an eye on it. Look at that monthly time frame here on gold. Do you really look at this monthly chart, see all these huge selling candles and go, oh yeah, we're bullish now? What? That sounds like you're trying to predict markets. That sounds like you're trying to catch bottoms, like you're trying to catch a falling knife. Do not do that. We do not want to see that occur. Yes, 1 minute before New York session opens, this was gold. That was some price levels on GC. Very quickly, we can cover the S&P 500 as well. Let's go over. Look, ooh, nice drop. There we go, S&P, and is NASDAQ dropping too for Elsa? I know she said she was in a short. It should be. There we go. So I want to see this drop on New York session open. NASDAQ, I would love to see some support near 28,200, 28,150. Major key level right there. Extremely strong level. ES, I wanted to see it pull back towards 75.20. VIX, take a look at the VIX. VIX is in a key area that I've seen, and I'm going to pull up the chart for a moment. This purple zone. Look at VIX's reaction to this zone. Every time we're in it, it gives us a reaction to the upside when it's support, to the downside when it's resistance. Right now, we're seeing it here, so we're acting as support. VIX might be trying to move higher from here. So VIX key level supporting a possible short-term move to the downside on ES and NQ. I'm not in any trades right now. I do want to see some more downside. There's that 28,373. Would love to go to 28,270. I think 270 is very possible. Now, somebody asked earlier too, what about the gap fill today on ES? I do think that's going to fill. That is right at. So if you're looking at a gap fill, you're not looking at the future session close. You're looking at the 4 o'clock candle. So you're looking at, if we're on the 5-minute time frame, you want to come to 355, the close of that 355. So there's our gap fill level. So when we talk about, I said earlier about how when it comes to trading, you want to find confluence. You want to find multiple reasons to take a trade. Now we have a gap fill level here. We have a broken supply zone level here. There's multiple reasons right off the bat to look for a trade in this zone. So looks nice. NASDAQ dropping lower as expected. Very beautiful, very nice move. We called that out pre-market. We're seeing it happen. I'm expecting at least another, I'd like to see another 100 points at least, possibly 188 points on the NASDAQ to the downside. My phone's blowing up because New York session is open. Amazon hits $3 trillion in market valuation for the first time. That is fantastic. Does that mean Amazon's at all-time highs right now? I bet it does. Let's take a look. Let's pull up our equities right here. We're going to put Amazon is going to replace our SpaceX now. Yup, there we go. Amazon all-time highs. These are bullish, bullish, and bullish reasons. So let's turn off. I do want to turn off my VWAP on that higher time frame. Remove it from all of these others. Remove. Go back into my VWAP settings here. Make sure it's only visible on the 5-minute. Perfect. And now I can add it to my, let's see, add this indicator to the entire layout. Perfect. Beautiful. Google moving higher. NVIDIA trying to hold up. Amazon flying. Take a quick look at the monthly chart right here on our equities. That's a bullish monthly last month on Amazon. Rejection on Apple, but it did make new all-time highs. Bullish on Microsoft, a bit bearish on Meta. Google, we see those wicks to the downside. That tells us every time sellers tried to bring us lower, buyers brought us back higher, which shows buying pressure. We have buying pressure. At some point, those sellers fail. Buying pressure squeezes us higher. Again, we're seeing that optimism re-enter the market. Does that mean pullbacks can't happen? Absolutely not. The next market zone on NQ is 28,100. Beautiful. That lines up near my 28,150. And that's previous day lows, 28,078. So I don't know if we're going to hit 28,100, but I would like to see 28,150 for sure. Last week, you and Alab were discussing a possible turning point. You can map that out, please. Turning point on which? The S&P, NASDAQ, or gold? I am currently in an MGC sell. What's up, Jessica? Let's check it out. Nice. There you go. Yeah, again, me too. I'd like to see MGC or GC or XAU USD, you know me, move on lower, head towards that 4,000 on XAU. That would be on GC. Take a look here. That would be 40.66. 40.66. So yeah, so in terms of a possible turnaround on gold, what we're really referring to isn't so much the technicals giving us a turnaround, but the fundamentals giving us a turnaround, where we have data start coming back in our favor. When employment data starts easing, inflation reports start easing, things are much better and more consistent for a bull market on gold. Now, I think somebody had a question earlier about a possible pullback level on gold. Let me see if I can find that real quick. Yep, Acoustic, if you're still in here, let me know in the chat. But you said, do you think gold could pull to 39.30 before moving to the upside? It absolutely can, right? Like Noab mentioned, it would most likely need a catalyst for that. But what can also drive that is just this pure market manipulation, this range bound we're seeing. We break towards that 39.30 area. We reject, we make a new low on gold, triggers a lot of sell positions from people trying to buy this recent range. They get triggered out of their longs. Just for what? What happens? They all sell, they sell, they sell. Somebody has to be buying that. Institutions are buying those sells because institutions want to buy low And then boom, what happens? They get stopped out for markets to then rally, and rip. Long-term wise, gold is in a great spot to start creating a position. If not, you do want to be a little extra patient. So gold, yeah, just mainly that fundamental buy is trying to shift right there. Other than that, we haven't seen that technical shift yet. So when we're looking at fundamentals, when we're looking at trading as a whole, we really want to be using everything together. Nice move lower, continuation on gold. I said before, what I say before, guys, I said I like these shorts on gold over here, but I'm not going to take it because I don't personally see a setup. If you saw it, you took it, great, you're making some money. I believe NASDAQ is pulling back at the moment to the upside. Yep, NASDAQ had a huge rejection. Be careful. We did fill gap on NQ. Well, gap fill on NQ is actually to the upside, so I think we're filling that right now. ES did not fill that gap yet. ES is close to new high of day during the future session. It's almost taking out those pre-market highs. Possibly look for a reaction there. I would just stay very patient. If you're in a trade, follow your rules, follow your system, follow your setup. If you're at take profit, take profit. Don't be greedy. If you feel like market conditions are starting to shift and you see a reason for that, then guess what? You're going to get out of your trade. Do not force trades if you do not see a high probability setup. Let's see, our open price on NASDAQ. Did I update that? Yes, I did. Look at this, ES ripping. Now, ES is ripping higher with strength because it's being supported by the Dow as well, right? Now, that doesn't mean if the Dow moves higher, ES moves higher. It's a correlation in the indexes. So it doesn't have that direct impact, but it does give us some follow-through. Nice hold up right there. We're at 28,530 on NASDAQ, and that was a quick reaction there, man. We were just at 28,325. We rallied 200 points in a matter of 10 minutes. So in terms of trading on the right side, we do know that ES and NQ are still bullish. Does it say overbought? Yes, so that means pullback's going to happen, but it's still more of a bullish bias with some possible optimism. Trump claims polled numbers are best ever on Truth Social. Oh yeah, for sure, 100%. Truth Social moves the markets, guys. Let's see. Wait, let's see. Here we go. Boo, Trump selling Truth Social for $100,000 is crazy. Boo. Take profit. There we go. There we go. W's to Jessica in the chat. That is fantastic. Good job, Jessica. Good work. Nice trade. Let's get. There we go. That's what I like to see. Bang. Look at that. Right to that previous day low level. Good job. Great work. Great trade. Great price target. That is phenomenal. Phenomenal. We are now just about 20 more points away from that final TP. If you're out of the trade, lock in those profits. There is no guarantee in markets. So when you're taking profit, you had a 3-to-1, you had a 4-to-1, you take profit. You don't get greedy. Yes, Tazzy, of course they're from HTL. That's the HTL gals in here. Love seeing it, man. Love seeing it. Bringing communities together here at Market in the Morning. Listen, you could have your trading community and join Market in the Morning. That's also one of the main reasons we go live at 8:20. Join us 8:20 to 9:30. Look at some setups. Read the analysis with us. Then go to your communities, right? Or stay here the whole time, 10:30, then go to your communities. Whatever you guys want. GU Shorts played amazing so far. Risk-free. Beautiful. Well done. Well done. Yup. Silver, gold usually does play hand in hand. What do you think about the possibility for gold to head to 3,800 before setting up buys? I think that's a bit of an extreme. And when we speculate, I should say, on a bigger pullback to a level that markets haven't seen recently, that could lead to poor trades. So we want to be very careful there. What you want to do when you're day trading is you want to more so look at the levels that price has been reacting to recently. We want to trade off those recent levels, not speculative levels. I'm late for school. Don, what's going on, brother? Hello and welcome. Welcome to Market in the Morning. Guys, if you haven't already, it is 9:40. Make sure you guys run that like button up. Hit subscribe if you haven't already. We do these Monday through Friday. You already know. Run the like button up. I'm thinking of also at some point doing some like weekend prep videos with you guys too. Maybe even what I'd love to do is some huge like game night where we do a mega Kahoot lobby, and we'll do some giveaways for that. That'll be a lot of fun. Do like 40 questions about day trading, and it'll cover day trading and fundamentals too. You know, it'll be dope. It'll be dope. It's exciting. I'll put that together at some point. I'll add it to my very busy schedule. NASDAQ struggling a bit with VWAP here. Let's take a look at our equities at the moment. Pull our equity chart up. Do you think ES will fill that gap now that NQ filled its gap? We'll take a look. I'm going to take a look in just one moment for you. It'll really depend on how NVIDIA reacts to VWAP right here. If NVIDIA could start cracking back below 198, hold below VWAP, I do think we're in for another pullback. If Meta holds bullish, Google's holding bullish, Microsoft trying to hold above, excuse me. Oh boy, I'd want to be a little more careful. I'd want to be a bit more patient. I do not want to force trades in these market conditions. We want to be patient, but we also want to be on the right side of the trend. I would like to see ES fill that gap around 75.20. This is not just a gap fill level. This was a very strong area where price gave us reactions to in the past multiple times. Take a look. Once to the downside, twice to the downside, 3 times to the downside. So now that price is trading above it, we would want to see price retrace to it again from the upside and move to the upside from that level. That is exactly what I'm watching on ES. That's my high probability trade setup for today. If that setup doesn't occur, then guess what? I'm looking for it tomorrow. I'm looking for it the next day. I'm not deleting it until I get that setup. When I get that setup, I'll look to create a new demand zone off this area and see how that wants to hold. But great question. Do you think ES is going to fill the gap since NQ has? It possibly can, right? Everything's a possibility in these markets. I would like to see that occur as we just swept pre-market highs and we're starting to pull back. NVIDIA is trying to hold lower. NVIDIA and Apple are really the two that are showing weakness right now. Other than that, Microsoft gapped up and is moving higher. Meta gapped up and is moving higher. Google did the same, and Amazon is at all-time highs. Whenever I have an equity that's at an all-time high, when it's a big tech equity like Amazon, like Apple, like Meta, last thing I want to do is short the NASDAQ. Does that mean shorts won't play out? Absolutely not. I still want these shorts to play out on MQ till 28,150. And I want ES shorts to play out here to 75.20. So I have my targets to the downside. It would really just depend on how and when markets can get to those levels. Let's see. Awesome, guys. We're going to have Imre back on this Wednesday. Let's go, baby. We got a jam-packed schedule for market in the morning this week. We had Nalab on this morning with me. Tomorrow we're going to have Jeev and Nalab for the Ask Market launch. After that, Wednesday, it's going to be me and Imre. Thursday, it's going to be me and Jeev. Friday, it's going to be me and Nalab. What a fun, packed week we have in store, guys. This is going to be phenomenal. So something I like to look for when it comes to looking for those pullbacks, sort of spectating which direction price should be trying to move in. If I'm stuck and I'm looking at a 5-minute, or you're looking at a 5-minute, you're like, oh, well, are buyers winning here? Are sellers winning here? What's going on? Go to the 15-minute time frame. Go to a 30-minute time frame. Let the higher time frame help dictate that momentum and trend. When you zoom out, you get a much clearer direction. How does one use the economic calendar and market to predict or determine the actual outcome of upcoming news? Example, ISM manufacturing in 17 minutes. Great question. Elsa, have a great day. I hope you did lock in profits on those NQ shorts, and if you didn't, I hope you followed your rules. All we have to do as traders to remain and build that consistency is build strong structure, follow our rules. Jess, take care. Jess, if you're getting out of here, you take care too. What's your prediction on NFP? So I'm going to get to my prediction on NFP in just a moment. I want to cover Paul's question where he says, how does one use the economic calendar to predict? So that's where sort of everything comes in line, right? And comes together. When we talked about earlier how a Trump headline alone doesn't move markets, but a Trump headline which has a relation to oil, which moves oil markets, will have that domino effect. So we're able to use that insight and use some of our events over here and our bias, what's supporting some of our headlines, and past data events to see what exactly is going on. So take a look here. Something you can always check too is the historical data chart on market, MRKT, where we see January 2026, actual was 47.9 on the ISM manufacturing. Then it had a nice clean rally up. Since then, look at that. From January to February, it had a huge spike higher. It's been on an uptrend. We see with our historical data chart here, it's been on more of an uptrend. It had a small decline from June to July over here, but still holding resilient. And you can also use your prediction market. It says prediction market, ISM manufacturing, outcome 45% as a 52 to 52.9. And that would be giving us, look at that, that's giving us below expectations. So now we could sort of use that as prediction-wise and say, okay, if it is below expectations, that tells me on ES, it's more bullish. Or on gold, it's more bullish. NASDAQ, more bullish. If it's below, above, it's more bearish. So that's one way you can use it to sort of determine and predict what's going on. And another way, you could even, when Ask Market is out, you can ask it what can, let's do it. Let's try it. Let's try it. What is the prediction? Let's ask it. Let's see, how do we word this perfectly, guys? What's the prediction for ISM manufacturing today? So what do we say? What's the prediction for ISM manufacturing today? And what are some of the supporting reasons? All right, let's see how it breaks it down for us. And then I will get to your question, kid, we'll call you Kid, on NFP and employment data coming out this week. So here we go. Look at this, beautiful. Whew. I'll pull today's ISM manufacturing PMI forecast and economic context around it. Pulled it. Let's see. High, forecast 54. Gives us the range. Supporting reason for the forecast. Continued expansion. A reading above 50 signals growth, and the forecast keeps the index comfortably in expansion territory for a second straight month. So it's already telling you last month it came out with growth. We're looking for that continuation. Momentum. The 0.7 points month-over-month rise suggests manufacturing is building steam, likely supporting by easing supply chain pressures and resilient demand. KD, I'm too old for Kid. Cool, bro. Cool, bro. Cool. Let's see. New orders and employment sub-indices both print alongside the headline. Strength in the ease would confirm the expansion is broadening. Prior strength in orders typically lifts the headline. Inflation easing, ISM prices paid is forecast to drop 73 to 71, signaling input cost pressures continue to moderate. A tailwind for margins and production activity. These are all positives. So this is positives that we might have a good reading, a higher reading on the ISM manufacturing. But remember, a higher reading does show more of a bearish impact on the ES and NQ there. So pretty cool. Pretty cool how so watch, a beat above 55 would be bullish on USD, bearish for rate cut odds. A miss below 53.5 flips bearish and revises soft landing doubts. So beautiful. Great breakdown right there. Thank you, Ask Market, for answering that and breaking that down for us. We could do the same thing. Let's go back to Ask Market. Say what? Oh, wait. Let's use voice text box. Oh, let's do this text box over here. Ready? What's your prediction and reasoning for NFP and employment data this week? What's your prediction and reasoning for NFP and employment data this week? Send. Pulling the data, pulling the information, composing your answer. I mean, not only does it give you a more accurate answer than something like ChatGPT would, but it pulls it up very quickly, and it pulls up real-time information. I asked GPT once. I remember this was a long time ago. It was not even a long time ago, but like 6 months ago, I was asking it about information to help me put a script together to cover it. and it was like employment data came at this, and we didn't even get the event. It was predicting the event, and it got it completely wrong. It was mind-blowing how wrong ChatGPT can be, and just blatantly lies. Excuse me. MRKT isn't doing that. I'll pull this week's employment calendar to see what's scheduled and get the NFP playbook. NFP prints Friday, August 7th at 8:30. Consensus is 80K, up from 57K last month. Initial jobless claims Thursday, August 6th. Forecast. How will ISM impact? Oh man, Dave, you gotta rewind like 20 minutes, not even like 10 minutes. Higher PMI is bullish for ES. We'll see. I'm going to cover that one more time for you guys before the PMI comes out. We do have 9 more minutes, but let's cover this NFP prediction real quick. So supporting reasons, recovery, the plus 23K month over month jump signals the labor market is stabilizing after last month's soft print. Consensus expects the improvement to hold. Private payrolls lead, forecast of plus 80K. Private plus 49K prior carries the headline. Government hiring is flat, so the bet is on private sector demand firming. Manufacturing stabilizing. ISM manufacturing today showed expansion. Oh, it did not come out yet. ISM manufacturing today showed expansion payrolls. So I do want to let them know. ISM, it said, and again, this is just how we make things better, right? So ISM manufacturing, but it is still 8 minutes before that event. Perfect. Beautiful. Wonderful. They're going to fix that, so it's better for you guys tomorrow. Jobless claims tightening up. Thursday's claims forecast rises to 202 from 197, a warning sign that layoffs may be edging higher and could weigh on the NFP print. Good to know. Wide forecast range, 40K to 140K. Economists' uncertainty is high. So if there's a high uncertainty, we want to be careful. We don't want to be the ones trying to predict something in high uncertainty environments. Now, you guys had questions. How is ISM manufacturing impacting the NASDAQ today? The only way a report like ISM manufacturing has that big of an impact on the S&P and NASDAQ is going to be if we're near the minimum or near the maximum. So right now, forecast and bank forecast is at 54. So that's right here, 54. That would give us no big trend, no big move. But if we take a look at how it impacts the ES, if it's above, that's bearish on the S&P 500. If it's below, that's bullish on the S&P and NASDAQ. So a higher than expected reading signals economic strength and is typically bullish for the currency. A lower reading suggests weakness, putting pressure on the currency. Watch for revisions to prior data, which can amplify the moves. Right now, 45% chance that we fall at 52, which would be lower than expected. So we'd look for a bullish reaction from that. Right now, look at that. ES new high of day right there. VIX is back to the downside. Very range bound on the VIX. I would be careful. We have that news coming out in about 6 minutes from now. If you're not in a trade, I wouldn't look to enter one as soon as we get that data. I'd look to sort of let markets play out from this point. Gold hit that previous day low. Jessica, if you're still in here, it smashed your take profit and reversed. That is one of the main reasons, too, we don't be greedy in the market. Imagine you were in a short position over here. And you said, okay, I'm short here. Stop at the high. I'm going to target previous day low, 3.5 to 1. This is a good risk to reward. But then markets start dumping, and you're like, wow, I have to move my take profit lower because I want to make this winner even bigger at this point. And sure, we should try to let our winners run. However, if you have a set take profit level from your pre-market plan, from your trades, that is not something you want to be doing. You want to respect your take profit just like you respect your stop loss, just like you respect your entry. I think that is wrong about PMI. I Googled it. All right, we'll take a look. We'll take a look. We'll take a look and we'll talk to the guys on the back end. And guess what? We'll also see how it comes out in 5 minutes, and that'll also give us the insight and clarity to see if it's right or wrong on that. So, again, back to this gold trade. Imagine you didn't take profit there. You're like, oh, wow, let me move this lower. Gold would have pulled back on you. Instead of locking in that 3.6 to 1, you'd be locking in possibly less than a 3-to-1, a 2.3-to-1. You'd be like, oh my God, well, now I have to hold it again to take profit. Then it could completely reverse on you, and you were just in a 3-to-1 trade that you let go all the way back to break even, all the way back to your stop loss. That is not what we want to do, and especially in these range-bound markets, we do not want to be doing that. So take your profit where your profit is. Don't be greedy. Boy, oh boy, don't be greedy. ES rallying with some nice strength. I think ES is heading towards new all-time highs, guys. It's going to hit new all-time highs before anybody even notices. That is right up here at 7,700. This is wild. That is just, boom, pivot right up 4% from those lows. NASDAQ has some ways to go, but NASDAQ also, again, a great buying opportunity on a long-term portfolio, not on a day trading side right now. Hitting the open price on NQ. Equities holding. Look at this. Look at this. I said watch NVIDIA to see how it reacts to 198. Bro, it hit 198.11, and then it rejected back higher. Bullish NVIDIA, bullish Apple, bullish Amazon, bullish Microsoft, bullish Meta, bullish Google, bullish equities. Do not short this market right now. Be patient. Let it come to us. Again, if you're not sure where your entry should be, look at that higher time frame, that 15-minute, that 30-minute, whatever the case may be. Let's see. Anything else? Guys, let me know in the comments. What ticker are you trading? Did you take any trades today? What are you looking for? Gold pulling back. ES and NQ chopping their way higher. Man, it is Monday blues over here, man. It is pouring. It is raining, pouring. The old man over here is snoring. Be on a NASDAQ sell. Oh, be careful selling NASDAQ. We just went over the strength in equities right now. Be very, very careful if you take a short on NASDAQ. That's a bit of a counter trend trade there. Not just because of where equities are trading, but also because of our bias here on NQ on market. AI earnings strength and long-term data center capex plans. Hit explain. Why? What does this have to do with our bullish bias? How does this make us bullish? Let's see. Market analyzing. Risk on for AI-linked equities and the NASDAQ 100 as strong earnings and multi-year data center capex commitments signal durable growth rather than short-lived bubble. There you go. There's everybody saying bubble, bubble. We're in a bubble. Let's pop that idea and throw it in the garbage. We are not in a bubble right now. The main transmission channel is hyperscalers and mega cap tech spending into AI infrastructure, supporting chip makers, cloud platforms, and data centers. Beautiful. Let's see. While anchoring index leadership in a backdrop of disinflation but elevated geopolitical risk, watch for any policy or demand shock that could challenge highly leveraged long-term AI capex plans. I'm sure you guys heard about situational awareness, right? Tell me, let's ask market. There was a big firm called Situational Awareness that recently took a massive hit. 22-year-old running this firm for he brought it from 200 million to 45 billion. Now it's all the way back down to 10 billion, which is still a nice return. 200 million to 10 billion, that's nice, but definitely a big hit, 45 to 10. Why did that happen? Because he was 4x leveraged. Not 4x FOREX, but the number 4. He was 4 times leveraged on a lot of AI companies. What happened to the firm? Oh, you know what? Situational. Let's actually forget that for a second. Go back to our economic calendar. 26 seconds for ISM manufacturing. Let's see how that comes out. Higher risk, higher reward. Yeah. Now, you know what? But you know what's funny too? Citadel came on like a month before it all happened and said, you have to watch your leverage. And then boom, got crushed. And I'm pretty sure Citadel was the one that bought them at their lows now. So pretty wild there. 3 seconds, ladies and gentlemen. Here we go. Higher than expected. Higher than expected. Bullish on the dollar, bearish on ES and NQ. Let's see if it has that reaction. Now, was it that much higher than expected? Not really. It's still within the range. We didn't even hit 56. So I wouldn't even note this as something that's going to have that big of an expectancy of a reaction. But we are already seeing that bearish reaction here. Right there, boom, 40 points, 50 points. See if that has a little follow through or if it's just a pullback. Remember, it did not break a strong move above or outside of that range. It is higher than expected, which is more bearish. So we'll just wait and see the reaction here. New 15-minute and 30-minute time frame closed very bullish. Hourly closed very bullish as well. So I would think this pullback is a short-term pullback. Let's see. We had a headline there. The headline probably just talking about ISM manufacturing. US ISM manufacturing PMI rises to 55.6 in July, beating estimates of 54 in last month's 53.3. Yeah, there was no entry for it. What entry do you want? You want me to just tell you to randomly take a short at the highs? We're not going to do that. I give you guys the zones. It's all about prep. It's all about preparation. The zone I'm looking for on NASDAQ's 28,150. I tell you guys and I help you guys prepare. I give you guys the zones that I'm watching. But if I don't see a setup, I'm not going to tell you, oh, it came out bearish for equities. Take a random short. We still want to be prepared. If you see a setup, take it yourself. But you don't want to be the type of trader that has to depend on somebody else. If you're depending on somebody else, you might as well go work a job where you got to listen to your boss. The whole goal of trading is not just the financial freedom, but the actual independence to do what you do what you can, trade yourself. You do not want to be a trader depending on others. Yeah, we're not here to give you trades on a silver spoon. Don't get me wrong. 100 billion %. Last week before that, we've been on a killer win streak on the NASDAQ and S&P. We were killing it, giving you guys bottoms. We went long, selling the highs. We went short. It was great. Right now, I'm seeing this as a no trade zone. I'd want to see ES is still trying to hold higher towards 76.14. I mentioned I want to see ES continue this rally and possibly hit 7,700. Do I think we're going to hit 7,700 today? No, that would call for us to move another 107 points from where we are right now. So is that possible? Is that probable? No, it's not probable. Is it possible? Unfortunately, and crazy enough, anything's possible in the market. That's why you have to ask yourself, is it probable? So there was the bearish reaction we had on NQ. We pulled back to the open price, and we see that we're trying to hold the open price right now. So listen, if you really are that eager of a beaver to try to take a trade, sure, you could possibly try it off the support of that key level to target the highs that we were at over here from the pre-market. That's a little bit of a 2-to-1. Am I going to take that trade? No, I don't see it as a high probability setup. I see VIX is at a key level here too. And again, I go over these trades. I set you guys up with levels, possible trade executions. Take them if you see it yourself. Do not just take, oh, Kevin said this could be, I'm going to take it. No, if you agree with it, go for it. If you don't, leave it alone. Look, see, it's failing. I'm leaving it alone. I'm not taking trades here. You have to be prepared and you have to be able to do your own research and breakdown of markets. This show here, Market in the Morning, is here to help you guys understand what's driving markets, understand the breakdowns, understand the fundamentals. It's not all useless. All right, buddy. All right, buddy. Yeah. Somebody doesn't want to learn, guys. Everybody here, guys, we all want to learn when it comes to trading, right? Drop a learn if you've learned something here from a Market in the Morning episode. Our goal as traders is to get 1% better every day. You join a stream like this, a free live stream like this. We give you trade setups. We give you analysis. We break down the fundamentals that come out. You want trade setups? We're giving you trade setups when they come. Thank you, Krista. Absolutely. Yeah. I mean, come on now. You're sort of left alone on your boat there, buddy. So don't be thinking that, oh, this is useless. Nah, man, this is all about learning, taking it to that next level, right? You want to be an educated person when it comes to markets. Every day I learn something from you. Thank you, guys. Thank you. All that support is beautiful. I love to see that. That is amazing. Thank you, Mike. I appreciate you, Ryder. Yeah, exactly. Appreciate you. Gemma, Anna, beautiful. Lisa, you got it. Ryder, yes, sir. That's what I'm talking about right there, right? That's ongoing support because we're giving real information. We're giving you breakdowns. We're giving you insights. Your goal, again, I said it before as a trader, is to not have to be dependent on somebody. It's an independent process. Yes, sir. Thank you, you. I appreciate you. I appreciate you. That's awesome, guys. That's great. Guys, smash that like button if you haven't already. Let me throw that up there. Boom. Cool little animation right there. But that's beautiful. That's support right there, man. That's support. You guys are great. You guys are W's in the chat. Appreciate you, Anna. Absolutely. Blue Sky, you got it. You got it. My pleasure. Always happy to help, guys. And look, see, so look at this. I just wanted to mention, we were questioning how does that really have a bearish reaction on ISM manufacturing for equities? And look, it did give us that bearish reaction on equities here. A little higher than expected, so we didn't get a crazy move, but we are getting the reaction. Yep, lots of nuggets today. You guys already know. And tomorrow is going to be the same thing. Every day, we're going to be going over something. The reason we're able to make every day something new and give you guys something new to learn and go over is because everything is riding differently. Every day is going to be trading differently. We get new headlines. We get new economic fundamentals. We get new breakdowns. We get new levels. And we see how different things are starting to trade. Take a look at oil, for instance. Below 80 again, that's great. Before, when we were extended on oil, S&P and NASDAQ were struggling, moving lower. Market conditions shift, market conditions change, and we keep you updated on those market condition changes here on Market in the Morning. MRKT, baby, you already know. Nice reaction so far on NASDAQ. Again, I wouldn't look to go long at this point. If you see a setup that is in your favor, go for it, right? I'm not taking it 50-50. What's really telling me to stay out of these markets right here is what the VIX is doing. The VIX is range bound. If I don't see confidence and trend in the VIX, usually that means more of a bullish move on the ES if VIX is ranging. But I know the economic data came out a bit more bearish. So there goes that 50-50. Not every day is going to give us 50-50 information where some is saying bearish, some is saying bullish. A lot of times we get continuation style information where we see, okay, economic event came out that supports NASDAQ and ES to the upside, and VIX is moving lower. New low of day on VIX confirms bull trend on ES and NQ. Boom, we continue. No, Tazzy, ignore that. If you're in the community, there are unfortunately fake Kevin accounts on Discord. So definitely ignore that or block them, but that is not me. I did not message you. That's funny if they're messaging you right now. Every day I keep showing up. I know eventually all of it will click. You got it. It absolutely will. It absolutely will. It takes time. We go over a lot of information. We break things down, but it will all click. The more you show up, the more experience you gain, the more exposure you gain in this industry, the more exposure you have, the more it's almost, I tell people it's like learning a new language. The more exposure you have, the more you learn this language of the markets, the stronger it'll be, the better you'll be as a trader, the more consistency you'll find in trading too. So really great there. Just keep showing up. The only way you fail in trading is when you quit. The only way you fail in trading is if you refuse to create your own pre-market routine and follow that routine to a T. Very good stuff there, guys. Fantastic. Fantastic. Look at this range on gold. We saw those shorts play out to the downside with price target of 40.20 on previous day low. Pulled back. This was a support zone. I'd want to see this hold as resistance, but does that mean I'm just going to take a random short? Absolutely not. I got the message on Discord. I asked him, let's talk on Instagram, and he is gone. Yeah, yep, fake Kevin account. Bro, they're crazy, man. Those fake accounts on Discord, they do not care. And unfortunately, Discord has like zero security system. Like anybody can make an account, make it look just like me, copy the bio, copy the image, and it looks like me. Somebody even made it with my full first and last name. It's crazy, but it's not me. I only have one account. I'll show you guys that account right now. Now let's see if we can pull up. So here's our market. Guys, come join our MRKT. Yeah, you want to see the high news tab? For sure. Let's pull that up, see if we had any news feed come out lately. Breaking news. U.S. shakes up currency markets with unusual yen buying via selling euros. Yields slip as oil retreats on Iran de-escalation hopes. U.S. ISM manufacturing PMI rises to 55.6 in July, beating estimates of 54 and last month's at 53. So remember, we used Ask Market to give us a prediction of the ISM manufacturing, and what it do? It gave us a spot-on prediction, and it gave us the reason for it too. It said higher, right? And it also said 0.7 points in month-over-month rise suggests manufacturing is building steam. There you go. There's your prediction. How cool is that? That is sick. All right, cool. So news feed, we're not really getting anything major right now. What's cool too with the news feed is we have all, then we have popular, which is where people are voting or bookmarking the same headline. It's going to show up in popular. We have our breaking news feed, which is a filter to our all. So it filters out to only the high impact news headlines that you should definitely be keeping an eye on. And of course, high impact is a filter on top of breaking news that will only give you those major high impacts. What's up, Kevin? What's up with the Illuminati on today's stream? What are you talking about? Where? Do you lose sound? You guys hear me okay? Let me see if that's working all right. Nope, sound should be okay. And Ryder, what are you talking about, homie? Which Illuminati? Am I missing something? Beautiful, guys. Good analysis, good breakdowns today. And again, not every day is going to be a day where we take a trade, where we take a high probability trade, right? Now, if you have a specific strategy where it's a scalping strategy, sure, you might have more opportunities than the next guy. But every trader is going to have a bit of a different strategy, right? It's all about personality. It's all about system. It's all about that follow through. Look at this, guys. We're trying to hold VWAP on NASDAQ, pushing green. We could see if we break back above 28,628, we'll most likely head towards 28,700. Bro, this guy was messaging with me since last night evening. That's really funny, bro, right? Imagine I'm live right here. I'm talking it up. I'm showing you charts. At the same time, somebody's messaging you, pretending to be me. While I'm doing this, it's like, damn, bro, you got talent. You got talent. You get multiple conversations at once. Guys, run that like button up. Let's hit 75 likes today. Really show people that we mean absolute business when it comes to market in the morning. That is what I'm talking about, ladies and gentlemen. Great stream today. Great knowledge, great breakdown. And again, this week is going to be jam-packed with knowledge, with information. We're going to have Nalab on 3 times this week. We're going to have Jivon twice this week. Imre on Wednesday. Absolutely stellar right there. Now, something I mentioned before on our equities, right? Remember, I was saying to look at the higher time frame. Said the 30-minute, the hourly, they all closed bullish. So I knew that this pullback we were seeing was going to be short-lived. And that's exactly what happened. Does that mean I'm going to take a random long position? Well, myself, no, I don't see a trade setup. Yeah, Nightmare, we do have a Discord community. I'm going to send you guys the link to come join that right now. We have a general chat. I'm going to invite the server, give you guys the link to that. It's going to be right in the comments. Come join that. Drop some chats. Say hello. Drop some charts on what you're looking at. You know, we have a lot of people are engaged in there. We have Daniel over here. We got Adhil. I think that's from the, I think that's the guy that was saying this is useless. That's great. No, it's not. It's not. Okay, good. But listen, knowledge is not useless. Knowledge is power, and it's always been power forever. Knowledge is everything. If you know something, you'll know what to prepare for, what not to prepare for. We will get the new version of Market log in, or do we have to wait for the official? Will we get the new Market version when we log in? Yeah, you'll get the new version when you log in. Absolutely. Absolutely. That will be, so like when Market releases an update, it's sent out live. It's automatically live to everybody. You don't have to download anything. It's web-based. It's app.marketedge.ai is the application. So when they produce an update, it's live instantly. See the Illuminati cover? Bro, I missed the cover. Are you talking about because I'm doing that? I know, that's Rita on the back end making that. I know, I saw that too. Thought that was pretty funny as well. But no Illuminati over here, man. No, sir. Let's see. But yeah, guys, join our Discord community. Very active in there. You guys could always feel free to ask questions. See how things are breaking down. See if you like something. Share your charts. And what's cool too, guys, in general, you could @ me. You could say @Kevin. Right there I am. Boom. You can say, what do you think of this chart? And you could add a screenshot of your chart. Or can you do a breakdown of this? And I could share it here on Market in the Morning, and we could do a full breakdown of your chart as well. see some levels, break it down. Is it consistent? What do you have to work on? Whatever the case may be. But yeah, come join the community. It's all about knowledge. Knowledge is power and community is key. When we have a strong community around us, we have that confidence that, okay, I do want to build here. I do want to learn here. I have good support. A support system, knowledge, and strong and smart people surrounded by us, that's going to give us insight. That's going to give us follow through. Boom. Aren't we glad we didn't take random longs on NASDAQ up here? Would have pulled back 40 to 50 points against us. We'd be like, what's going on? Why did I take that? The data said this said that. Knowledge, strength, integrity. You got it, brother, man. Absolutely. Absolutely. ES showing a lot more relative strength today. That is something we've noted sort of since markets opened. When, look at this. Take a look right here. ES broke pre-market highs about 10 minutes into the New York session open. NASDAQ is still not at its pre-market highs. So again, I am still bullish because we know our bias is bullish. I just personally don't see a trade setup myself that I would really be so quick to take, right? So when we're quick to not take a trade, it requires patience. It instills patience. It instills value. It instills being a good trader. Any high impact news that came out affecting gold? We could take a look. I don't believe so. We see that gold didn't really have an impact. Maybe if you're referring to that recent 5-minute candle that spiked up. But remember, everything is relative. So when we look at that big spike up on gold, it might look like it was big, maybe even on like a 1 minute, but not necessarily, because in relation to the prior moves we had, that was really just more of a range. So we did not have any high impact news. I'm even going to say that right now before checking. We did not have any high impact news. Let's take a look. Breaking news 3 minutes ago. Marine traffic data reveals 39 crossing through Strait of Hormuz on August 2nd with diverging traffic patterns. What does this mean? What's this mean right here? Explain. Risk off for shipping sensitive markets with a mild bullish bias for oil and safe havens. The headline shows traffic is still flowing but remains uneven through 2 critical choke points, which keeps the geopolitical risk premium alive and raises freight, insurance, and delivery time costs. The key watch is whether this divergence turns into a sharper drop in tanker transits. So again, does this have follow through or not? Right now, it's not impacting markets the way a follow through event would. Even oil. Oil's been range bound here. Why would he? This is a good spot to possibly short oil back to the bottom of the range. But right now, there is nothing with certainty. There is no strong clarity other than the fact that ES is rallying. Would like to see ES try to hold and make its way towards 76.15. Oh, are they in the trading pot? Good call. So you know what happens? Sometimes people will join, and then they'll change their names. I see them. I found them. Yep. Real quick, I want to show you guys. I have in headquarters where people join, so it's hidden. And I check every time somebody joins. This person's name was not Kevin when they joined. But now we found him. I'm gonna ban him. Guys, what do you do with the soccer ball? It's a meme from back in the day. I wonder if you guys get that reference. It was really more of a video game thing. But you say, what do you do with the soccer ball? And you say, you kick it. And then you kick somebody out of the community or out of the party. Yep, here we go. Here we go. Join Discord. That's crazy, man. That person joined Discord 4 years ago and changed their name just to try to, boom. They're getting the ban hammer, man. Ban. Spam. Ban. Oh, come on. I don't know the code. Get out of here. Verify with something else. Send a code. We get things done here. Yeah. You guys get it. You guys get it. VIX moving lower. That's a nice confirmation to new low of day right there. That person is out of here. Nice. Awesome, man. Awesome. Good stuff, ladies and gentlemen. Great breakdown today. It is 10:20. Gold is range bound. These markets are choppy, right? Other than the ES, markets have been choppy. With, you know, the guy talking nonsense before about, oh, this is useless. No, because if we tell you it's a bad condition to trade and you force 4 trades and you're like, oh, I lost that. You didn't lose because you were listening to us. You lost because you were forcing trades, right? So you don't want to be the person that in your trading journey, you're just constantly blaming others for your losses, right? That's why I always said before, be consistent, create your own system, create a routine that you follow every single day, not a routine where you join a stream and you're like, oh, okay, whatever you say, I'll do. You use your heads. We're smart people. If you're getting into trading alone tells me that you're a smarter than average person because you see the opportunity that the market has to present. Now you have to take it upon yourself to prove to yourself that you are that smarter person and actually learn about the financial markets, learn a strategy, learn a system that you could follow through. Thank you, Yusuf. You're our Jeev in the chat today. I have a quick question from your back testing ISM days. Do you find it to be choppy? Great question. Great question. So yes and no. It all depends on the actual follow through. So with a service and with a report like ISM manufacturing, because it's not on the high end of super important reports, right? It's not a non-farm payroll. It's not a CPI. It's not a PPI. It's ISM manufacturing. These are not very low impacting, but we saw that the impact was spot on from market, gave us a 97-point pullback when the report came out, but the overall trend was still bullish, so we just continued and plowed right through. So what happens? We continue and we take ISM manufacturing, not so much with a grain of salt, because again, it depends on the read. If it was extreme, like if ISM manufacturing came out, it came out at 55.6. If it came out at like 57.6, that would be an extreme. So yeah, just something to keep in mind. ISM manufacturing, not the craziest of moves. Whereas a day like CPI, non-farm payroll, if non-farm payroll comes directly on forecast, that could be more of a range-bound market. So everything is under consideration. What's up, KD? That's usually my nickname, KD 2.0. I have a question regarding something I've heard you speak about before regarding locking in profit. Was there a time that you had an issue that needed to be right with the analysis and the monetary gain? So was there a time where you had that issue? What do you mean had an issue? Like had an issue taking profit, or had an issue with like being right and then being wrong with the bias? What's the question there exactly? Because in regards to taking profit, so something we might look for, let's just say, for example, on NASDAQ, that we did end up taking a long position somewhere down here, right? And we said, okay, with momentum, because Amazon's pushing to new high of day, I'll take it once we break back above that 5-minute high. And my first take profit will be the open price level. So if that was your trade setup, right, you take it, but you know that the general bias is bullish, and you know that, okay, my edge is supply and demand, which usually means 95% of the time from the experience, we're going to hit a supply or demand level on the intraday on ES or NQ. So that means if we're not moving lower, there's only one direction markets can move, and that's going to be higher. Okay, well, if I have take profit 1 right here, that's where you're going to lock in profit, where you say, okay, I was in 5 micros right here. We caught 130 points. I'm going to lock in, depending on where your second take profit is, depending on the momentum, I'm going to lock in 3 of my 5 contracts and let 2 run and put those last 2 to break even to give it some room to breathe. Whereas on the back end of that, if you had a stronger risk to reward on your first trade, let's say it was 3-1, 4-1, yeah, you want to lock in full profit there, because you don't want to lock in partial for a 3-1, have the last few contracts come against you, and then that trade turns into a 2-1 or a 1.5-1 because you didn't lock in your full profit. So you do want to be a little extra careful. Knowing that the trend is in your favor is usually when you're going to want to hold that trade for longer, where you're letting that trade run in your favor. Again, NVIDIA rallying today, Microsoft at all-time highs today, $3 trillion market evaluation. Mwah, beautiful, cherry on top, chef's kiss right there. Yo, where can we see a pullback from this? Is a resistance close on ES? Let's take a look. Yeah, so resistance on ES, I had 76.14. 76.14 was a great spot. Really, really nice area, 76.14. And I'm going to show you guys how I found that zone. So when I mark out my zones, I don't just mark them out with rectangles. I like to put a trend line tool so I can see and plot it and see, okay, this was a 4 hour. So then I could come to the 4 hour and see where I found it. Take a look at that, guys. Look how strong this high is over here. We've rejected this area once, twice, 3 times. That's a very strong point. So until we break that area, sellers are still present. So if that's the case, that's my target to the upside if I know we're bullish. The problem I've had is I keep myself in a trade till the win becomes losses. So yeah, so that's not a great thing, but it is something that is great that you're able to acknowledge what one of your problems is. A lot of traders will just sort of force trades and not realize what their problem is, and they'll come back and they'll repeat and do the same thing over and over again. Guys, if you're doing the same thing and you're expecting different results, that's the definition of insanity. The definition of insanity is doing the same thing over and over and expecting different results. If you're getting poor results in your trading, it's time to do something different. Create a pre-market routine. Now here's a question for you. Your problem being, I hold these trades until a winner turns into a loss. Do you have take profit levels on this trade? Do you have a level where you're looking for profit to be hit to close out the trade, and then you're just holding longer? Yusuf, you got it. Insane in the membrane. Insane in the brain. But are you giving yourself take profit levels where you're saying, okay, this is where I'm looking for markets to react. This is my take profit, and then I'm holding longer? Or do you enter a trade and not have a take profit in mind? If you enter a trade and you don't have a take profit level in mind, that's also going to set you up for failure. You could be right on those trades, right? You could be right on 90% of your trades, but if you don't have a take profit level, then yeah, 90% of those 90% of the trades are going to end up coming back to break even on you because you didn't know when to say when. You didn't know when to lock in profit. When you know exactly, when you're entering a trade, you have to know 3 things. You have to know the why you're entering, you have to know where you're entering, and you also have to know when you're entering, right? Timing in the market is everything. Now, on top of those 3 things, there are 3 other things you have to know. And this goes by price levels. You have to know your entry point, your stop loss. Now, your stop loss should never be a fixed price amount where it's like, okay, I always trade an ES and I always keep a 5-point stop loss. Because in a day like today where we're getting 20.5-minute candles, a 5-point stop loss is going to wick you out. You need a larger stop loss on a day like today. So where's your stop loss? Your stop loss should be where your analysis is wrong or incorrect. And then your take profit. The take profit should be a level that price is shown an area that has reacted to before, where it's a pre-market high. It's a supply zone if you trade supply and demand, or a higher time frame key level like Jeev in the lab trade, right? Higher time frame key levels, those line up right with my supply and demand levels. That is a correlation right there, right? Multiple people, different strategies, all looking at that same area. You want to look at where price looks extended, right? Again, whether you're trading, maybe you're trading RSI and you get out when RSI gets overbought or when it holds overbought, whatever the case may be. But you want to have actual reasoning behind everything. Reasoning behind your entry, reasoning behind your stop loss. That's where your analysis is wrong, and your take profit level. Once you can reason and you have an actual reason behind these levels, that's when you'll start seeing some confidence. That's when you'll start seeing some follow through. But creating a pre-market plan, having a trade plan, a playbook, that will keep you in line too. But I can't emphasize enough, have a pre-market plan. I post a little chart recap every day in my community. This is a free community to join, by the way. I'll post the link to that as well in here if you guys want to join. I go live there when I'm done with the market in the morning stream. So you guys could feel free to join that too. But I post my chart analysis in the mornings there. whether I'm using it with my morning mentor tool that I created, or I'm just posting the chart and giving you guys a rundown. ES today. Again, remember, ES New York session opened. We don't know what's going to happen. So I looked for 75.04 to 75.25. This is a broken supply zone, becomes demand for longs. A strong break below 7,500 for some with some type of catalyst, I will look for a short. Other than that, could have possibly came up with a pre-market plan to go long as well on the break of the pre-market highs. So definitely a lot to consider. Definitely a lot to consider when it comes to these trades. Really good stuff, guys. Create a pre-market plan, have your analysis, and have a consistent routine that you follow, and make market in the morning part of that routine. Where even if during market in the morning, you're doing your own analysis, you break it down. You want to give yourselves, I tell this to everybody that I end up helping in these markets, you want to give yourself 10, 15 minutes to do a chart review so you could go over how did the markets move yesterday? How are markets looking on a daily time frame? Where are my key levels that I'm looking for today that markets have reacted to recently, or that markets have broken out of recently? When you start answering those questions and you find your levels ahead of time, every little move you see in between those levels is going to be just that. It's just going to be noise. And when you can identify noise versus actual entries, same thing. You're building confidence, you're building routine, and you're building structure. Ladies and gentlemen, that was today's episode of Market in the Morning. I do hope you guys enjoyed it. Another great session full of great information. Nothing but gold nuggets for you guys. Always looking to help give you guys good success, good follow through, and a good trading journey, right? This is a very difficult journey. Getting into trading is very hard. You know, people get into trading and think they could just look for call outs, or they could just look for this, just look for that. Guys, it's a journey, and it's one of the most difficult journeys you'll ever face. Doctors go to school for 8 years. Lawyers go to school for 8 years. They have to put in a lot of time and effort. Then they have to do on-the-job training. They have to do so much that is required for them to get to the point of profitability. Doctors, when they're going to school for those 8 years and they're doing their residency, for the most part, they're not really making money. It's when they get that job. It's when they finish that schooling. In trading, you really do have to give yourself the ability to say, this is my institution, my education. I'm paying for my education here, whether you're paying for it with losses or you're having somebody help you with some guidance, whatever the case may be. But your lessons should be learned, and you should create a system where you're taking each loss as a lesson and building off it. Even taking each win as a lesson and building off each win. So guys, that was our episode of Market in the Morning today. I hope you enjoyed it. Great breakdowns. Tomorrow is the official launch of Ask Market. Very excited to host that live stream here tomorrow. That's true. I'm a doctor, and this was very tough. Oh, yeah? And this is way tougher. That's crazy, man. That's cool. That's pretty cool. Yo, join the community. Come say hello. Always happy to have people in there. Think you did. I look forward to seeing you in there. Guys, have a great rest of your day. I will see you all back here tomorrow. Make sure to follow us on social media. Is marketai.insights on Instagram, market_AI on Twitter. And I will see you guys all tomorrow. Take care, everybody.